Hey everybody, Dennis Wilburn, the Active Trend Trader. After 6 days moving up, the indexes look like they're taking a little bit of a break today. But the big question I have is, do we buy the dip that's coming? And if we are going to buy the dip, where do we buy the dip? And that's one thing that trend traders and swing traders need to have in mind. You have to have a mechanism to identify action value zones where you will say, I want to take a trade here. We're going to cover that today's session, but let's get down and review the markets first, and we'll proceed from there. Okay, here's what we've got going on with the S&P. As you can see, we have gone up. Now, we basically went up 1, 2, 3, 4, 5, 6 days up. This day right here, which was Wednesday of last week, we had the follow-through day, which put the market back into a confirmed uptrend according to Investor Business Daily. Look what took place yesterday. Price action pierced and closed above the 200-day moving average. Today, basically, prices sold off. But where do we want to take potentially take a stand and look for an opportunity to jump on a swing trade? And there's a couple of different ways of doing that. And to identify the action value zones. And here's where we want to take a look at. Here we go. So how do you identify value action zones? This is something new that I'm introducing on the radar. Just a little bit of a snapshot, a little bit of a teaching. And here are some of the more commonly used action value zones. Action value zones is simply some people call them value zones, sometimes people call them support, resistance. It's an identified level where we can plan trades around, either to enter and or exit trades. And we have identified those. They oftentimes coincide with prior swings, swing highs and swing lows. So it's a level of support or resistance where we can plan entries and exits off, for particular swing trades. Secondly, you can also have dynamic levels, which are basically the moving averages and trend lines. I call them dynamic because they move, and so the actual level is actually moving all through when the market is open. Trend lines, still dynamic because they're also sloping either up or down. And what are we looking at doing with those? We're looking at, on both of those, let's see, I've got price action moving up like this, moving up, 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 up. And I've got a trend line now that is basically running across this level here. Well, I can identify, and I'm waiting for a pullback into that trend line to take a trade right there, or to set up a trade, I should say. I'm going to basically... That is the level right there where it's a low risk level to take to basically try to get into a position. Why? Because if I fall and it fails and breaks back down below the trend line, or let's say this last swing low here, I've identified that as my objectives, and I've identified my risk on the trade. And with the expectation, of course, is we want to see it bounce and come into here, bounce, and then continue on its way. And then we can set up the rest of the trade from there. If we do the same thing, let me see if I can get rid of that. Maybe I can't get rid of it. There we go. Let's see. I'm looking at a trend line. As a trend line break, well, it's very similar. Well, the trend line, or not, excuse me, the moving average. Moving average is going to be coming in through something like this, and it's coming up here. And so then on a situation like this, I'm looking for the pullback into the moving average. And sometimes we'll play multiple moving averages. When it gets in that zone, that's where we want to be taking a look at, jumping on a trade to the upside. It, again, identifies a objective level, a line of demarcation where I'll look to put in a conditional order to take a trade here, but if it fails, it also gives me a real quick ability to exit the trade for a very small loss. So let's see, and let's go ahead and finish up, and then we'll take a look at some of the real-time charts on that. And so some of the other aspects we have are static levels, which is basically horizontal and support and resistance. And always remember that as we move up through horizontal support and it breaks through horizontal support, you have a change of polarity on that moving into resistance. You have a change of polarity. Let's say this is a level, and price actions are moving up through there. And the price comes up and hits it once, hits it twice, and then finally breaks through. Well, as soon as we break through, that line of resistance now turns into a line of support, and price actions will often come back into here. That's our area of our basically our action value zone, and it's easy to see and it's easy to identify. So that's where we want to be basically planning our trades off of. What else we have there? Combos. Combos include Fibonacci's and variations between time frames. Sometimes you switch between time frames from a shorter time frame to a longer time frame. You'll see hidden levels of support and resistance that will pop out. And if I'm looking for horizontal support and resistance, I lean towards the longer term time frames because they tend to be a little bit stronger in both the support and the resistance aspect. And so each provides object prices to plan trades against, so you're not just winging it. So if you find that's helpful, I appreciate that. Then let me know what you think about adding this to our new on the radar session. Now let's get back and take a look at the rest of the story here. And here's where I identify in my charts. As you can see here on the weekly chart, I've identified zones. So oftentimes my support and resistance, they're not just a line, but they're a zone. When price actions gets in there, that's also where I'm going to call it the meat grinder. Oftentimes prices will get in there, hammer around, break around, and then move up. With the S&P, I'm looking for a pullback. Let's take a look at one of the mechanisms on the NASDAQ that I can utilize for identifying a potential zone, action value zone. And I want to basically take a look at the moving averages. The purple one there is the 8, and the other one is the 20. Oftentimes you get a reversion to the mean back to the 20. And then it'll bounce from there, or it may overshoot a little bit. And so we have a pretty rich environment here of levels where we could find support. Another way I will like to find support is just throw a very simple Fibonacci, simple, straightforward Fibonacci. And I'll go from high to low in this particular case. But I want to give a projection to the upside. Did I get that in there right? And when I go from high to low like that, we'll blow that up. The box that I'm looking at, I call it the magic fib box. It's from the 38 or the 618 to the 38 retracement, including the 50. It's in that little box right there. Prices will often, now that we've had a reversal, as long as we do not take out the bearish harami, bearish reversal signal we have on the NASDAQ today, I'll look for it to pull down into those levels. I can use those levels as my objective means of determining where to take a trade. And then all I had to do is identify and say, okay, if it draws back to 50%, that's $337.65. I want to be ready to take, look for a trade. Do I put an order down there? Sometimes I do. Sometimes I'll put a conditional order to buy it there. And if it drops below the next level down, the $322.88 level, that's my exit to get out. How much would I be risking in a situation like that? I fill at the 50% and I drop down a little bit. You know, what is that? That's like about less than 2%. So that's the risk that I would have on that trade. So just keep that in mind. I'm looking for a comeback and, a pullback into this area. Put an alert right on the very top of this, just outside of the box. Put an alert there. Put an alert just above the 50% retracement, and put an alert just below the 38 or the 618 retracement, depending on how you drew your fibs. And then if that alert's off, go check the chart out if you have that capability during the day. So that's what we've got going on with the Qs. You can see we're dropping back down. Nice move up, but this defines where a healthy pullback would be. So if I'm going to buy the dip, I want to see I pull back into these areas and put in what's also called a bull flag, and then come to rest down here, do a reversal, and be on its way. That would do a couple of things for me. That would, one, provide me I have a higher high because we took out this high. If I come down and hit that level there and it reverses, that would give me a higher low. Therefore, I would be by definition back into an uptrend on the NASDAQ. Here we go on IWM. IWM, where am I looking for it to go? I'm looking for IWM, the Russell, to go down to about the 20. I like the midsection of and one of the things that you can notice here on the weekly chart, you see that that is the 8-week moving average right there, which corresponds a lot of times to about the 50 or the 34. It's at 202.80. Well, 202.80 is just right there. 202.80 is just above the 34. So that would be a good place for it to potentially reverse and bounce. But I can also just throw on a Fibonacci on, again, I'm not throwing all the Fibonacci retracements and extensions. I just want to be looking for the pullback, bull flag, where I want to be alerted saying price action is coming into an action value zone that could represent an opportunity to buy at wholesale. So I can grab my fib here. And again, I can measure from the high to the low, from there down to there, and look at there. Okay, my 618 is just slightly above. Matter of fact, it's right there at the 202.33 level, $200 level, and then also the $198 level. If you like to trade the leverage ETFs, you can do the same darn thing with that. Just go ahead and draw in your fib. Similar thing. And the midsection there, that's the 50% retracement. The other thing I'm looking at, that's a convergence of clues at the up-down trend line, where if I came down and hit the 50 over the next day or so, that would mean I would be basically coming back to potentially kiss the trend line goodbye and then bounce from there. So anywhere in that magic fib box could represent a level of the action value zone where we could buy at wholesale. And just as a real quick, how far is if I bought at the 50, how far is the 618 or the 38? It's about 3%. And so as you can see, 3% go just outside of that. 4-5% would be a good opportunity. A lot of times folks will just, now that we've got this heading down, this is the first day where we've had a lower high and a lower low, just let this track down. In the next couple of days, what we could see is basically a new candle here, a new candle here, a new candle here, and then what that would be putting out is a bull flag. Look for the breakout above that, and away we go back into the uptrend. If it craps out and then falls all the way down into here, below the 78, it makes this rebound suspect. Doesn't mean that it won't work, but it makes it suspect. So I hope you're finding that beneficial. Let me get rid of that. Let's take a look at a couple of stocks to do the same thing with. Let's take a look at Apple. Apple has basically gotten back into the highlights a little bit. As you can see, we came up to the top of the Keltner channel, and we are coming back down off the Keltner channel. Where might we identify the levels of the strong levels of where we could get is right there, that cluster of moving averages. Great spot. What else could we look at? Of course, we could look at the Fibonacci. I will draw in a Fibonacci just very rapidly here, just so we can have an idea of where the Fib will basically put us. And again, I'm just checking the simplest Fib, the Fibonacci retracement. That's all I'm interested in right now. It gives me an idea, and it gives me at least a working theory on what I expect to happen. So that could pull back into the magic Fib box. And again, it corresponds to the downtrend line. And so we've already passed that one. So the next area would be about 158, and that would be inside the magic Fib box. So look for a reversal there. The other one we want to take a look at that is looking kind of interesting. I wanted to try to get into Tesla a little bit earlier. I'm going to move this, activate and move it up a little bit. One of the things I'll do, this is just a little hack, is that I'll identify, like this is the 200-day moving average. I'll identify where it's at, and then I'll move my horizontal line, because that reflects the 200-day moving average for me. So what am I looking at with Tesla? Tesla has gone back into is it back fully into an uptrend? Yeah. Higher low, higher high, higher low. And this is a strong move up. All the moving averages are starting to cross back up. We have the 8 crossing the 20, the 8 crossing the 34, and the 8 crossing the 50. Look for a potential pullback into the 50 or all the way to the 20. If we lay on a Fibonacci on this one, where do those things coincide? And here's one of the things I find very interesting. Earlier in the week, the 50% retracement was right there at the 200-day moving average. Strong move up. Nice volume on Tesla. So where's an area of value for us? Well, I like it maybe at 896 all the way down to 865 in there. And again, there's the box. I'll go ahead and draw that box back in there just so you'll see me do it one more time. And when I do that there, I will also go ahead and activate or edit this. Let's extend that out a little bit. Let's say on out to, May or June or the end of July time frame. That makes sense. There we go. And then that'll show up over here on the weekly chart also. As you see, that is my magic Fib box. Now, if I'm violated to the downside on the magic Fib box, as long as that low from a couple of weeks ago stays in place, this Fib box still is a legitimate zone to be looking for trades. I don't want it to break out the bottom of the magic Fib box, but it can. On some occasions, it can pull all the way down here. This is the 23% retracement. It's actually the 78% retracement down here. And so it may come back all the way to there and then rebound back up. But I can use the levels on the fibs to identify, okay, here's where I want to trigger my trades in. So I hope you found that helpful and interesting. If you did, please, hey, just do me a favor, subscribe to our YouTube channel, Market Tech Talk. Provide some comments. Let's have a dialogue about what specifically we're looking for auto value action value zones. If you like that concept and an idea, just let me know. If there's any stock you want me to take a look at on the radar, I'll be glad to do that, but you have to let me know what it is. Got some really cool stuff coming up with active trend traders and the AutoPilot Trading Service. So stay tuned. There'll be more information, and I'll be providing more tech tips like this on things like more in depth about how to use the moving averages, more in depth about how to use conditional orders. And so one of the next one we're going to be doing also is how to score stocks. In other words, rank stocks so that you know you're always trading the best of the best. Stay tuned. That'll be happening next Wednesday. Aloha. God bless everybody. And before we head out of here, I have to do this, which is to say aloha. Have a great rest of your day and a great rest of the week. See ya.